Western Copper and Gold, fairly straightforward company. We have one asset, which is the Casino Copper Gold project located up in the Yukon. We'll be making forward-looking statements, so please review this before making any investment decisions. Just a little bit, we are dual listed. We're listed both on the NYC American and the TSX. At the end of Q1, we had $3.6 million. That said, I just closed a financing last Friday for $3.35 million. So we're starting in Q2 here with about $7 million. That was a flow-through financing, though, and we will have to spend that on drilling. Share price is about 70 cents, gives us market cap around 70 million. Like most people, that's fairly low for us. We usually trade in the $1 to $1.50 range. Where are the shares? Management board has 8%. 6 of that 8% is with our chairman, Dale. There's a group of high net worth investors that have a bulk of the shares, and really there's a half a dozen people there that have been good, good friends of Dale's and represent the bulk of our outstanding shareholders. Headline numbers are there. If you look at the top row is the reserve, the bottom row is the inferred resource, but combined together you're looking at 18 million ounces of gold and 10 billion pounds of copper located up in the Yukon. So it's a significant copper and gold project. Is it a copper project or a gold project? If you look at the projected revenue, you're looking at about half of it from copper, about 40% from gold, and a significant portion from molybdenum as well. A little bit about the copper market. I'm not going to spend too much time on this slide. Probably a lot of you have seen this. The key message here is that in the next decade, we need another 5 million tons of copper to come on. If you look at Casino, which is a large copper mine, you still need 65 mines the size of that. If you look at the gold space, really the story on the gold space is that we really haven't been finding a lot of gold. There hasn't been much success at the drill bit globally. So the fact that we have 18 million ounces of gold is significant. And when you look at the copper space on a global basis, and you look, and we went on to the TSX and we said, what are all the copper juniors that have at least a PEA? And we put them all on the map, and that's what you end up with there. There's about 13 names on that. It's a different commodity than gold. Copper deposits tend to be big, but they're few and far between. When you look at the big gold deposit map, it even looks worse. This is the junior-controlled gold projects that are greater than 12 million ounces overall. There's about 6 names on that map. Very, very small space. So we think it's a good market for big copper gold projects. You're seeing some good headwinds in both copper and gold. And in the M&A space, we've seen some activity right in our neck of the woods in northern BC with Newcrest buying 90% of the Red Chris deposit. So talk a little bit more about the project here quickly. First of all, the team. I talked about Dale. I'm the guy in the middle. The other key guy there is Cam. Cam spent the bulk of his career with Bechtel Engineering, and importantly, he was the project manager on the Los Pelambres mine, so he does have big mine experience and big copper concentrator experience. Looking at the board, I don't usually show the board, but we've added a couple new board members in the past couple months. We brought on Tara Christie, who's got a long experience up in the Yukon, and Ken Williamson. And Ken Williamson was on the board of Goldcorp, which of course is no longer a board, and he joined our board about 6 weeks ago. We've been developing the Casino project. We acquired it in 2006. We really started working on it in 2008, so we got a little over 10 years development on it. We did a lot of drilling. We did 2 pre-feasibility studies and then a full bankable feasibility study. We got into permitting. Permitting was going well until, I'll be honest, until Mount Poly and the Brazil tailings dam failures happened. We had to sort of press the pause button and do a bunch more work on tailings with the community and the indigenous groups in the area. That was this BAT study, Best Available Tailings Technology Study, that we completed last fall. Now going forward, we have a small drill campaign, which I just raised the money for. They're actually headed up today with the drill. They should start drilling in the next couple of weeks. We're going to complete that, roll that into an updated feasibility study, and then get back into the permitting process. This shows the deposit. The surface of the deposit, which is shown in gold there, is enriched in gold, depleted in copper. That's 157 million tons at 0.3 gram per ton gold. Beneath that, in the dark and the light orange, is the main copper porphyry. That's 965 million tons at 0.5% copper equivalent. But key is the first 4 years. First 4 years, which is shown there in the light orange, is 0.7% copper equivalent. So that's one of the key things that drives the good economics that we see on the project. Beneath that is the inferred resource. So right now, with the life of mine, it's a 22-year pit, but if we put a pit around that inferred resource, it comes up to 55 years. That's what we know. In addition to that, shown here is a couple of geophysical anomalies that we haven't drilled out, but there's also potential that there's additional ore there as well. I said we're going to do a small drilling campaign this summer. Really, it's to convert this inferred. There's a little bit of inferred ore that's in the pit right now. We'll convert that into measured and indicated, and then eventually into the reserve. We think there's about 100 million tons there that will convert. Based on the feasibility study, project enjoys very good economics. Excuse me, at $2.75 copper and $1,300 gold. You've got a 25% IRR, essentially a $3 billion net present value, and a payback in less than 2.5 years. Why are those? And if you don't like those numbers for your commodities, you can sort of take a look at this at other commodity prices. But even at $1,000 copper and $2 copper and $1,000 gold, this project still has a 15% IRR. What drives the good economics on the project? Part of it is that early high grade at 0.7. The other one is the strip ratio. Right now, the strip ratio is 0.6 to 1. When we drill out that inferred that's in the pit, that'll drop further. We'll see what it ends up with being, but we think it'll drop to below 0.5 to 1 life of mine. And that's a very key parameter. It really keeps the cost down in terms of what the mining costs look like, and it's sort of the key to the success of this project. Operating costs, in terms of cash costs, it's best to look at the co-product cash costs. You're looking at a co-product cash cost of $1.36 per pound of copper and $644 per ounce of gold. So those are about half of the value of where those commodities are trading, which is usually a good rule of thumb for a good operation. Capital cost, you don't get those returns without spending some money. We're looking at a capital cost of $2.45 billion. Looking at this graph, this shows just sort of the normalized graph in terms of capital intensity, and you can see we're right in the middle, so we're essentially an average capital cost for a mine of this size. Had some interesting developments over the past couple of years. This is about 18 months ago. That's the Prime Minister of Canada. The other guy is the Premier of the Yukon, who spoke here yesterday. They were 18 months ago, came up to the Yukon to make an infrastructure announcement. 3 roads as part of that infrastructure announcement. One of those roads is the road to our mine. I was pleased to see earlier this year that the government came up with an agreement with the First Nations. They're starting the engineering and permitting on that road and expect to be breaking ground on it next year. We've been up in the community for about 10 years. You don't build mines in this day and age unless you've got the support of the local Indigenous groups, the community, the governments. We've worked very hard on that, and we're very pleased that where we're sitting on in terms of those relationships. We do have agreements with the key First Nations and support a number of initiatives up in the area. Talked a bit about that tailings study. It took a long time, but we did that with the community and the First Nations. The final tailings design has a number of improvements over the previous one. Reduced water storage, reduce in height, and a relocation of some of the facilities within that thing. Last, I'm going to leave you a little bit about where we are. We're that blob of orange in the middle of that claim map. Our next door neighbor is actually touching us used to be Goldcorp, now it's Newmont with the coffee project. And then everything there in pink is white gold, and that's 20% Yukon, or 20% Agnico and 20% Kinross. So I'm out of time. That's my last slide, but thank you guys very much. And if you have any questions, I'm around for a little while, though I'm pretty much back to back at C13. Thank you.